better get myself into the house.
Good morning or good afternoon.
Good afternoon.
Good afternoon.
How's everybody doing today?
Blessed, cannot complain.
So are you going to be getting some of the storms and rain coming in from Delta?
I hope not.
It's been kind of relentless this year. Well, we'll give everybody a a couple minutes yet to get logged in here. So is your market about as crazy as it is in the Minneapolis area with no listings and everything going into multiple offers?
I know a lot of people haven't been getting too many listings.
Yeah, it's been a challenge.
Mm-hmm.
$20 offers. Wow. You still got a couple people logging in here. All right. Well, I think we'll go ahead and get started. I'll try and keep an eye on the anybody else looking to get into the meeting, so I can let them in. But good afternoon, everybody. Thanks to Les for inviting me to come and share this with you. And just want to go over kind of an agenda that we're going to be going through today. First, I'm going to tell you a little about myself, who I am, and why I'm teaching a P&L class, how I got to this point. And then we're going to kind of talk about what a P&L statement is, why it's important for your business, and what it can do for you in running your business. And I'm not sure if you received any of the documents that were sent out, but I did create a P&L workbook tutorial. And basically, it's kind of an instruction manual on how to use the workbook, and a lot of tips in there as far as how to get around. So we'll take a look at a few pages from the tutorial just so I can show you some of the features that are built into the workbook. Then we'll actually get into plugging in some data into the workbook to show you how that transfers over to the P&L, as well as the different reports and tools available to you to help run your business. And then we'll kind of finish up with some takeaways. And so throughout the class, please don't hesitate to unmute yourself, ask questions, throw a question in the chat box. But I want to make it as interactive as possible and make sure that everybody gets as much as possible out of this. So again, my name is Tom Wright, and I am an agent with Keller Williams Preferred Realty in Burnsville, Minnesota, which is just a southern suburb of Minneapolis and St. Paul. Prior to getting into real estate, I spent over 20 years in the call center management industry. The company that I worked for had about 25 call center locations around the country, a couple in Canada. I was responsible for overseeing anywhere from 6 to 8 of those locations at any one time. So I would visit these centers, and one of the tools that we use in running the business, running the call centers, was a P&L statement. So we would review that with the managers at the center. We could instantly see if the office was profitable. If not, we'd dig in further and we'd be able to see, where we could make adjustments, where there are expenses that we could cut back or cut out completely to increase our profitability, or different revenue streams that we could tap into. So in 2015, the company I was working for was going through an acquisition and doing some restructuring. I wasn't real happy about the way that it was going to be affecting my position. So I made it a goal to get my real estate license after some prompting from some friends as well as my wife. So I did that in the fall of 2015, and I joined Keller Williams in Burnsville, Minnesota. In 2017, it got to a point where I decided that I was going to go full-time into real estate. And so I left my call center management job and jumped into real estate with both feet. Once my business started taking off, I realized I wasn't practicing what I had been preaching in the call center, which was, using a P&L statement to manage my business, to run my business. So I created one for myself. And then in 2020, I was asked to be a member on our ALC in our market center. So with that, I've taken on the initiative of being the committee chair of our finance committee. So I've adapted my P&L statement so that it was easy for anyone to use. I know that there's different levels of comfort with Excel. So I've tried to simplify it as much as possible and not make it any more daunting than it needs to be. And so as you'll see, I'm kind of an Excel nerd, and kind of get off on Excel very much. All right, so what is a P&L statement? The easiest way to look at it is a P&L statement is kind of like a scorecard or a health report for your business. So it gives you the ability to look at your income, your costs, your expenses, and make adjustments quickly before those expenses get out of hand. So you keep your profitability up. When the pandemic hit, things started shutting down back in March of this year. One of the things that Gary Keller talked about quite often was reviewing your P&L and making sure that you are, cutting expenses where you can to increase your profitability. And let me ask real quick, just a quick poll. How many people are currently using a P&L or some sort of tracking system in your business? Whether it's a spreadsheet, it's QuickBooks, anything like that. All right, well, the goal here is to get as many people as possible utilizing this and understanding the importance of knowing your numbers and knowing where you're at in your business. So what I've done is I've modeled my workbook after the budget model of the Millionaire Real Estate Agent. And so I want to just kind of read a statement here. There's a natural monthly rhythm to business, which demands that you examine your books at least once each month. I'll go as far as to recommend you keep a monthly budget, but address it on a weekly basis. Why? Because leading with revenue and red light, green light require you to stay in touch with your spending. So if you've read MREA, you probably recognize that this is from Gary Keller, and this is from the budget model. If you're not familiar with what red light, green light is, basically it's when you find your expenses creeping up in cost, and at some point they will, without a corresponding increase in results, then it's time to pull out the stop sign and reevaluate that expense. If it's generating more revenue than it costs, then, run with it. Otherwise, look to see where you can cut back and increase that profitability. All right, so jumping into the tutorial. I use a lot of color coding in the workbook. I find, for me, I'm very visual, so it's nice to be able to, have my eye drawn to where I need to enter data or where I need to focus. So anytime you see a green cell in the workbook, that indicates that you have the ability to enter data into that cell. I've also tried to minimize the amount of data entry that you'll have to do and duplicate entries. So for instance, on the monthly budget tab, where it says any agent, you would enter your name or your business name along with the budget year that you're tracking. And those items are going to automatically transfer over to multiple tabs within the workbook. So eliminating the need to make duplicate entries. At the bottom of the workbook, you can't see it on this screenshot, but there are 10 different tabs. Again, those are color-coded. Any tabs that are colored green indicate that you'll be able to enter data into those spreadsheets. If it's a black tab, it indicates that it's either for informational or reporting purposes. So as we get into the workbook itself, one of the features I've built in, and we're going to talk about a chart of accounts here in a few minutes. But on the income statement or the P&L, you're going to see categories, such as advertising, rent, cost of sales. These are all the primary categories within the chart of accounts. And within those are subcategories that allow you to dig in and provide more detail for what that expense is. So you're going to see these plus signs down the left side of the spreadsheet, and you can click on any plus sign to expand the category and be able to see all of the subcategories underneath. You'll also be able to expand everything simultaneously. At the top of that column above the plus and minus signs is a number 1 and a number 2. By clicking on the number 2, that's going to expand all of the categories simultaneously so you can see the detail in every category. And then if you click on the number 1 at the top of the column, that will collapse all the categories. So it just depends on the view that you want to look at. If you just want to focus on one set of expenses or, just your total income, then you can just expand that specific category. The variance tab, I believe, is one of the most powerful in the workbook because it will give you the ability to compare your actual income and expense versus what you budgeted for. And again, using color coding, it's going to show you, green is good. That means you are exceeding budget. If you are, if it's red, then you're going to be able to, focus on that to see where you can maybe cut expenses and, continue to improve your profitability. You can click the drop down to select any given month to do your comparison. All right, and before we get into the workbook itself, I just want to point out a couple things with Excel. This workbook is compatible with the desktop version of Excel as well as Office 365. For those of you who use, Chromebooks, Google Sheets, I'm working on a version that will be compatible with that. A few of the features won't be available in that version, but for the most part, everything else will. Now, when you first open the workbook, you're probably going to be prompted with a security warning that is going to ask you to enable macros. So I've got macros built in which enable some of the features, such as the expanding and collapsing of the categories, as well as the graphing that is done. And lastly, once you get started, I would suggest doing a save as and just tag it at the end of the file name with the year that you're tracking. That way, you now have a blank copy that you can use for subsequent years when you're budgeting and tracking your income and expense. All right, I'm gonna switch screens here and we're gonna jump into the workbook itself. And again, don't hesitate to stop me and ask any questions as we're going along. So everything kind of starts with creating your monthly budget. And I mean, right now, this is a perfect time to get started for 2021. Everybody's going to be setting their goals as far as number of transactions, what GCI you're looking to achieve in 2021, and the budget gives you the ability to break that down in detail so that you can track where you're at any given time during the year. So as I mentioned before, the cell 1A is where you would enter your name or your business name. My business name happens to be The Wright Agent. And then you plug in the year that you're tracking. And this information is automatically going to transfer over to multiple worksheets within the workbook. All right. So when you get started, you're going to probably take a look at and enter your budgeted income that you're anticipating for the coming year. So remember, when you're entering listing income or sales income from a buyer, this is going to be your GCI. So this isn't the number, this isn't the amount that's going to show up on your commission check. This is the amount of the commission prior to any deductions coming out. So when we look at line 9 for total income, this is your goal for GCI for the year. Then when we go down to cost of sales, and we'll talk about cost of sales a little bit in a few minutes, but this is going to be your commissions that are paid to the office, royalties that are paid to KWRI. And then when we look at line 17, your gross profit, that's going to be your 1099 that you would get at the end of the year. All right, as we go down and start entering expenses, again, we can, select any given category to expand that. And where we see the green cells, that means we can enter data into those. If you want to expand everything, again, we just click on the number 2 up here at the top of that column, and it expands all of the categories so we can see the detail everywhere. Now, and hopefully everyone is getting a little piece of this pie, but if you're getting profit share, that's also going to be entered on the itemized income tab. However, that is going to show up down here on line 91. And in accounting terms, that's called below the line income. So it's not something that is a typical or normal source of revenue. So that's why it's shown below the line. And one little caveat that I want to point out, or a little disclaimer, I guess, I'm not an accountant. I'm not a CPA, so I'm not going to, be giving you tax advice or anything like that. But when it comes to determining what your anticipated tax liability is, definitely talk with your accountant, your CPA, to determine what that number is. Everybody's going to be a little different depending on circumstances. But let's say, for instance, your anticipated tax percentage or liability is 25%. You plug that number in, and on line 97, you're going to see an estimated amount of taxes that you need to allow for come tax time. Whether you're paying on a quarterly basis or annual basis, however you do your taxes. I've got a question here. Missed the beginning. How do we get this workbook or spreadsheets? I sent this off to Stephanie, and I believe she was going to make this available to everyone in the Market Center so that you'd be able to download that. I'm not sure if it's going to be on your Market Center Facebook page or however you distribute documents. All right. Any questions so far? All right. I'm going to jump over to the chart of accounts. So this is kind of where we systematically determine where a specific type of income, cost of sales, or expense is going to show up on our P&L. So what a chart of accounts is there are primary categories such as income. We have residential income, and it's given an account code of 41,000. Within residential income, we can break that down and get specific by showing whether it's listing income, sales income, referral, or leasing income. Each one of those subcategories has its own account code. So when we enter an income or expense, we associate that with the given account code, and that's how it gets placed into our P&L statement. So we can see cost of sales. We've got a primary category as well as several subcategories, as well as with expenses. Everything is broken down into more detail. This chart of accounts is pretty extensive and kind of a lot to go through. So I've got this here primarily for reference. To simplify things, what I've done is, for instance, when we go over to the itemized income tab, and we're entering our revenue here, I only have the chart of accounts that applies to income, so you don't have to sift through unnecessary categories. Same with cost of sales and with expenses. So minimize the need to have to go back and forth between tabs to find what you need. And now, is anyone using QuickBooks? I generally find at least a couple people in each market center that are using QuickBooks to some extent. And so what I've done is created a tab that allows you to export your transactions from QuickBooks, copy and paste those into this spreadsheet, so it eliminates duplicate entries. So you've already made these entries once in QuickBooks, and you don't want to have to do that again. So I've got a sample export from QuickBooks that I'm going to plug in here. It automatically converts that into the format that I use in this workbook. So once it's converted, we can just copy this data now and paste it into our itemized expenses tab. And now all we have to do is categorize each of these expenses to get it plugged into our P&L. So as far as doing, selecting the correct account code for each expense, there's a couple ways we can do it. One, I know a Quick Trip is where I get gas, so I know this is a gas expense. So I can scroll down to the automobile category, find that gas is account code 66300, and I could enter it that way. Or gotta use a shortcut in Excel, which is the find feature, Control F as in Frank. And it brings up a little window, and we can just type gas and click find next, and it takes us right to that category. And so again, we can take that number and plug it in. And then when we jump over to the profit and loss statement, we're going to see that that expense in the automobile category. And if we expand the category, we can now see that, gas is where that expense has been applied. So again, making sure that you plug in the correct account code is going to determine where it shows up on the P&L statement. All right, so I've got some sample data that I'm going to plug in here just to save some time for us. I've got them already set up with account codes. So we plug those in here, look at our monthly P&L, and now we can see our expenses starting to fill in here. And we'll do the same with cost of sales. And I had mentioned cost of sales can get a little confusing sometimes as far as determining what exactly is cost of sales. The easiest way to remember is if there is no closing, there's no cost of sales. So for instance, if you have a listing and you hire a photographer to come in and take photos, videos, etc., or hire a stager, if by chance that listing expires and does not sell, you still have to pay that photographer and the stager. So those would be expenses and not cost of sales. So your cost of sales, again, are going to be your commissions paid to the office up to whatever your cap is, as well as royalties, or if you're a rainmaker, it will be commissions that are paid to your listing or buyer specialists. All right, when we enter our income, again, descriptions, totally up to you how you want to put in your descriptions. They can be by client name, by address, whatever works for you to be able to identify where that revenue came from. Excuse me. All right, so now when we look at our P&L, we can really see where our income is getting generated. Whether it's listing or buyer income. We get a breakdown of our cost of sales as far as what we paid in royalties, commissions, etc. All right, and then we can also see down at the bottom what our net profit is on a monthly basis as well as for the year. And if you are working with an accountant or a CPA to do your taxes, more than likely, they're not going to be terribly interested in seeing a month-by-month breakdown. They're going to want to see it more of a higher level view. So what I've created is another tab, which just gives you a look at the P&L on an annual basis. Has the same functionality as being able to expand and collapse categories so that your CPA can see the detail and know where to assign those expenses in your tax return. And now, one thing I do highly suggest is don't commingle your personal and your business expenses. Keep those separated. It will make your life much simpler. I also recommend, setting up a business checking account to run your business on a daily basis. Also set up a separate account. I use a savings account or a money market account where I put money in that I need for my taxes. So I know that money's always there, and I'm not worried when tax time comes around if I have to, steal money from one account or another to make sure that my taxes are paid. And I also set up another account that I put a percentage of my income into that I use for things that I want, for my family, whether it's, for a vacation or, purchasing a big item, anything like that. But put your money into different buckets and, protect your business, protect yourself. All right, the variance tab. Again, I mentioned, I think this is a really powerful tool to really be able to see where your business is at any given time. And, you get cues as far as where you need to, kind of focus and make sure you're being as profitable as possible. So again, here we're looking at our actual income or revenue is well above what we had budgeted for, which is great. So we've got, showing up as green, 211% ahead of budget. One caveat is when we look at cost of sales. And here our cost of sales is higher than our budget. That's not necessarily a bad thing, because if our cost of sales is up, that means our revenue is up. So take this one with a grain of salt. But when we look at expenses, anything that shows up in red, we definitely want to kind of pay a little attention to that and look to see, is that something that I can control? Is that something that I can cut back or eliminate? And then we can select any given month to do that same comparison. So again, going back to what Gary Keller had said about, keeping an eye on your P&L and your expenses, this gives you the ability to see that in a very visual format. All right, and I had mentioned that I modeled this after MREA, the budget model. And so what I've included on this tab is the best practices model. I'm sure you've seen this in MREA. This actually is the, kind of hot off the press. This is what's going to be in MREA 2, the updated best practices numbers. And you're probably familiar with the 30-30-40 rule, which is 30% of your GCI should go towards cost of sales, 30% towards expenses, leaving you with a net profit of 40%. And this is great rule of thumb if you're netting $1 million. If you're like me, you're not quite there yet. So what we need to do is just look at the different categories for GCI and find the one that most closely relates to where you're at in your business. So the numbers are going to change depending on what your GCI is. So for instance, if your GCI is around 150,000 and you're a solo agent, your cost of sales are going to be somewhere around 13%, your expenses around 38%, and your net income or profit around 49%. If you are a team member, these numbers are going to be a little different. Your cost of sales will probably, still be in that same 13% category, but your expenses will likely be lower because chances are the rainmaker is picking up a lot of the marketing expense. So that reduces your liability, the amount of expenses that you're going to be paying for. So that expenses number will probably be a little lower, and your net income subsequently will be higher. So just take into consideration, where you're at in your business. Are you a solo agent, rainmaker, or team member, to determine what numbers are going to fit your business profile. So as we've made these entries, we can come to this chart at any time and just click refresh chart. And now we can see a visual of where we're at in comparison to the budget model, in comparison to the best practices. So we can see where we're at as a percentage of cost of sales, expenses, as well as our revenue. And this will show up on a month-to-month basis as you make your entries. And over to the far right, we can see our year-to-date numbers. All right. Any questions, comments? All right, well, I'm gonna switch screens here again. Go back to PowerPoint and just kind of talk about some takeaways. If you don't have any sort of a tracking system in place, whether it's an Excel spreadsheet, QuickBooks, whatever, I encourage you to start using one now. If you're a newer agent, just getting started in real estate, now is the perfect time to get this in place. Even if you don't have much to put into it, getting in the habit is huge. And for everyone, get in the habit of making these entries on a weekly, bi-weekly, or monthly basis. I do mine on a weekly basis. I find it's much easier because there's fewer entries that have to be made. It doesn't take me more than 15 minutes. And I would say if you go more than monthly between making entries, it gets to be a little overwhelming. And what generally happens at that point is it gets to be too much of a burden and you discontinue using this valuable tool. So again, get in the habit as soon as possible. And as Gary mentioned, review your profitability regularly. So by making these entries on a weekly, bi-weekly, or monthly basis, you're always looking at your profitability. You know where your numbers are. You know where you need to make adjustments to increase your profitability. And most importantly, be profitable. So again, questions, comments, anything you want me to kind of go over and review again? All right. Well, one last thing that I want to touch on is, we went over the QuickBooks tab. I can also do customizations if anyone is interested. I don't charge anything for the workbook itself. As far as doing customizations, it's basically to cover my time. But just like the QuickBooks tab, where you can export your transactions and copy and paste them into this workbook, I can set that same thing up for you for your business checking account, for a credit card that you use for business, just to minimize that amount of data entry that you have to do. So all I would need would be a sample export from the account that you want to customize. You can change amounts, change descriptions, whatever, that's fine. I just need the format of the export so I know which columns to include so I can build that for you. Yeah, as far as the QuickBooks tab, you would still do your entries in that, you know, as long as that's a tool that you've been using. But to actually view it in a P&L format and to utilize the other tools in this workbook, you would just do a copy and paste and then categorize each of those items. So you wouldn't have to manually type in every transaction. This would save you that time of making those entries. Sure. I'm not sure if you can see the screen or not. My contact info is at the bottom of the page, and I'll make sure that Stephanie provides my contact information for everyone. Don't hesitate to reach out if you have questions, not sure how to get started, anything like that. I'm more than happy to help you. So my goal is to get as many agents as possible using a P&L statement in their business, you know, making sure that everyone is running their business as a business. All right, well, if there are no other questions, I want to thank everybody for being here this afternoon. And again, please reach out if I can help you in any way. And if you have any clients that are looking to move to the Minneapolis area, I'd love to help them, and I'd love to connect with you, because if I have anybody moving to the Atlanta area, I would love to have somebody that I can refer them to. So feel free to reach out, and I hope everybody has a great weekend and a great rest of the year. Stay safe. And again, thank you very much.